I don't know about you, but it seems like there are more divorces going on these days. And in this video, we're going to talk about transferring ownership of the property, then what to do with the existing mortgage. Now, most married couples typically own the property as joint tenants. After the divorce, one person will need to be removed as an owner. This is typically done through a document called a quitclaim deed. Why is this called a quitclaim deed? Because someone is quitting their claim on the property. Makes sense. Anyways, once this is signed and notarized, it will need to be recorded with the county. Most of the time your attorney will provide this for you, but it can also be done through a title company. You can simply call the title company and let them know that you just got divorced and need to file a quitclaim deed. They will provide the document for you to sign. They'll also notarize and take it to the county for you for recording. This can typically be done in a couple of days. Next is the mortgage on the home. Now there's a few things that you'll need to think about, such as options for paying out equity, what happens if the person keeping the home can't qualify to refinance a loan, and how it affects qualifying for a new home. First, let's start with paying out equity. Now, some people may use other assets such as investment accounts or 401ks to pay out equity. In this video, we're going to focus on using a refinance to do what's called an equity buyout. When people think of pulling cash out of their home, they often do a cash out refinance. These types of refinances often have a higher interest rate and some restrictions. Lucky for you, this is not considered a cash out refinance. That's right. An equity buyout is not considered a cash out refinance. So why is this important? Let's say you have a property that has about 30% equity in it. This is a loan to value ratio of 70%. You agree to buy out the other person's share of 15% and apply for a loan with a loan to value ratio of 85%. So if you were doing a cash out refinance, this loan to value would be too high to qualify for most loan programs. But if it isn't considered a cash out, then your loan to value ratio of 85% is okay and you get a better interest rate. Please note that both parties typically have to be on title for 12 months in order for this to happen. Now, some lenders don't know this, so it's important that you do. If you refinance your first mortgage in 2021 and have an interest rate in the 2s, you may consider taking out a second mortgage instead. Second mortgages do have a higher interest rate, but paying a higher rate on a smaller amount may be worth it. If you're going to go this route, make sure you go with an option that has a fixed interest rate. Many second mortgages have an adjustable rate, and when the feds raise interest rates, these are directly affected. And it will be expected that the feds will raise the rates several times this year in 2022 to fight inflation. So this adjustable rate might seem really cool right now, but it won't be after a few rate increases. Make sure yours is fixed if you go this route. Now, sometimes people apply and just can't get qualified to do an equity buyout refinance due to credit or other factors. Selling the home may not be ideal for their situation, so the other person must remain on the current loan. You'll need to know how this can affect credit and your ability to purchase another home. The good news is that if you want to purchase another home, the lender won't consider the payment on the existing mortgage so long as the divorce decree states that it is the responsibility of the person keeping the home to make the payment, right? The bad news is if they miss a payment, it will ding your credit score. If the payments are made on time, having this other mortgage on credit will not affect your ability to purchase a new home. So if you found this video helpful, please be sure to give it a thumbs up so YouTube will show it to other people. Thanks so much for watching.